Why HMRC can trigger tax investigation. Hi, my name is Anupam Saha. I'm an accountant. I regularly upload video in my TikTok, YouTube, and Facebook regarding how to save tax. If you want to save tax, please follow me on TikTok, YouTube, and Facebook. Today, I will talk about why HMRC trigger tax investigation. There could be many reasons HMRC can trigger tax investigation. Any unusual activity in your tax record or in your accounts could flag up for an HMRC tax compliance check. Here, I will talk about 10 main reasons where HMRC can trigger a tax investigation. Number 1. Late submission and late payment. If a taxpayer consistently submit their tax return late and pay their tax late, or made an error in the tax return, later needed corrections, those scenarios HMRC can trigger investigation. High risk industry. HMRC considers some of the business very high risk industry. For example, the businesses who deals with mostly cash. For example, a saloon business. HMRC target most on those cash businesses, so there is more chances they can get tax investigation. Number 3, director salary. If a company making a loss, but on the other hand, director taking very high wages every month, that could actually trigger investigation as well. High variations. Huge variation of incomes one year to another year. For example, 1 year income is very high and the next year income is very low. That could trigger an investigation. Number 5, industry standards. If your business record not aligning with industry standard, for example, hospitality industry, gross profit margin generally in UK is 50 to 70%, but your similar business, you are showing the gross profit margin is 20%, which can trigger an investigation. Number 6, failure to declare certain type of income. For example, you have a rental property, but you haven't declared rental income in your tax return. You have an overseas income, you haven't declared that, but HMRC has a information regarding that. HMRC normally initiate investigation by cross-referencing your file tax return with the existing data HMRC already have. Large VAT claim. If the business or every quarter pays VAT, but one quarter all of a sudden huge claim could trigger investigation. High turnover. A business has a very high turnover, but at the year end, the business pays very minimum amount of tax or claim abnormal expenses, which is not business related, which artificially reduce the profit and pays less tax. Random investigation. Every year, HMRC do regularly compliance check whether taxpayer paying right amount of tax. So you might be one of them. If someone inform HMRC that you have a different source of income, but you are not declaring, in that case, HMRC can trigger investigation. I'm sharing this information based on my 15 years experience, accountancy and tax practice. When you do your tax return, if you consider this point I mentioned, you could save yourself from tax investigation. If you need any more information, please contact me. Thank you.